Hello, my name is Mark Warren. I'm the manager for public equities at Westpath. Thank you for joining me for our Markets at a Glance recap of January 2023. U.S. stock prices rose thanks to growing investor confidence in the U.S. Federal Reserve's aggressive approach to cooling inflation. Continued easing of inflation also helped U.S. stocks. I'll have more detail about inflation in just a minute. The S&P 500 climbed 6.3% for the month. The MSCI EAFE index for stocks in developed countries outside the U.S. jumped 8.1% for the month. The MSCI Emerging Markets IMI index was right behind it, climbing 7.6%. Bond prices also were up as yields fell during the month. The Bloomberg U.S. Aggregate Bond Index increased 3.1%. Now back to inflation. The Federal Reserve's go-to gauge of inflation is called the Core Personal Consumption Expenditures Index. I know that's a lot. It shows how much you and I pay for goods and services, but it does not factor in the cost of food and energy because those prices can be volatile. The Fed's go-to indicator dropped 0.3% in December on a year-over-year basis. It declined from 4.7% in November to 4.4% in December. While inflation dipped a little, we are still feeling the effects of it. U.S. consumer spending fell 0.2% in January. Higher interest rates also gave U.S. consumers pause. Corporate earnings for S&P 500 companies for the fourth quarter are expected to fall 5% from a year ago, based on analyst estimates from the end of January. Companies have had to navigate a challenging economic environment. Despite these apparent negative data points, the U.S. economy added 517,000 non-farm jobs in January, and the unemployment rate dipped to 3.4%. The jobs numbers meaningfully surpassed expectations. You've probably heard or seen news reports about layoffs at many large tech companies in recent months. Layoffs and a weakening economic environment typically lead to higher unemployment, but the unemployment rate and the initial jobless claims have instead dipped as depicted in our chart of the month. In fact, the number of initial jobless claims in 17 of the past 23 weeks was below the consensus number from economists. To read more about this news and to see how it affected our fund performance for January, check out our monthly investment report.